I spent the first half of my career in software startups using Microsoft SQL Server almost religiously. The last startup I worked at, we used Microsoft BizTalk and built a company from the ground up in the food distribution industry, displacing their archaic EDI technology. I spent the second half of my career in finance and the past decade researching tech investing. I couldn't tell you what Microsoft does. It made me wonder just how many Microsoft investors could. I mean, they do cloud stuff, Xbox, LinkedIn, Windows, what else? So the question we're going to answer today is, what does the second largest company in the world do? The answer is a lot. So when we look at the list of the largest firms in the world, you can see Microsoft is up there in second place. And for as big as they are, they're quite nimble when it comes to revenue growth. So you can see over the last 10 years, they've had a compound annual growth rate of 9.5%. That's pretty good, especially when you consider how diversified the revenue streams are. Now, the company breaks their products down into three main business segments. You're going to become quite familiar with these names today. The first is intelligent cloud. The second is productivity and business processes. And the third is more personal computing. And you see here some of the logos associated with these segments. And whilst these brands may be quite popular, they're not necessarily contributing a lot to these segments. So let's start at the broad level and look at revenues coming from each of these segments. So this handy table here, taken from their last 10K, shows you 2023 revenues for each segment. They're along the top, so $211 billion. You can compare that to 2022, so they had 7% growth in revenues. Then you can see for each segment the change year over year there on the right, and on the left in blue there we've plugged in the percentage. So for example, intelligent cloud is 41% of total revenues. Now when you look at the operating income table, this is kind of interesting because it shows you the contribution to profits that each of these segments have. So even though more personal computing accounts for 26% of revenues, it only accounts for 19% of their operating income. And you can see also the decrease there in profitability for that segment. So more personal computing, we can see, is recognizing declining growth and profitability over time. That used to be almost half of their revenues in 2016, and now it's down to almost a quarter. For each segment, then, we also have the compound annual growth rate over 9 years. And for the productivity and business processes, that's 10%. For intelligent cloud, it's 15%. And for more personal computing, as we said, 4%, quite low. What's interesting about Microsoft? They had a blended gross margin in 2023, so they use a fiscal year, which is always confusing, of nearly 70%. That's incredible when you consider how diversified this business is. So when we look at what Microsoft does even deeper, what we can do is take their annual report and then start to estimate the size of subsegments based on growth numbers they provide. Now, there's going to be some rounding errors there that we've allocated to the other bucket. And you need to note that these are revenues, not profitability. They don't provide that, but this is still very interesting. So let's start with productivity and business processes. You can see here, as we said, revenue of $69 billion, 33% of the total. And let's start going down the list here. So at the top, you have Office Commercial Products Cloud. So we all know what Office is. You can see some of the icons there on the right. So this is selling Office to enterprises, $40 billion. So that's somewhere around 20%. It's easy just to use $200 billion as their total revenue. It's actually 211, but just keep it round. You can say, well, that's roughly what, 20%. 20% of their total revenues. Then we have Office Consumer, so all of us paying $99.99 a year to access Office products in the cloud. They actually saw some downwards growth for that segment as they migrate customers away from product solutions to the cloud. That's $7 billion, not very much. LinkedIn with their $14.3 billion in revenues coming from talent solutions, marketing, premium sub sales, stuff like that. Then they have Dynamics products and cloud services, $5 billion. What's interesting about this segment, they describe it as ERP, CRM, Customer Insights, Power Apps. You don't really need to know those acronyms, but Power Automate. So this is their RPA solution. It's said to bring in about $2 billion in 2022. That's the most recent number that we can find. And investors in UiPath are going to be particularly interested in watching that. Then we have 2% other. So this is a third of Microsoft's business. It's quite remarkable how successful Office Commercial is for them. That franchise is doing quite well. There's also accompanying growth numbers for every single one of these segments, but we're not going to get into that today. When we move into intelligent cloud, revenues of $88 billion, so 44% of the total. 10% of those are what they refer to as enterprise services. It's what it says on the tin. About $8.2 billion coming from support services, consulting, and Nuance professional services. They've broken out Nuance differently, but 90% of this segment, the vast majority, comes from what they refer to as server products and cloud services revenues. Now, the first problem here is we're not told what percentage of this segment, which is massive, right, comes from Azure. Azure is Microsoft's hyperscaler. They're one of the three large hyperscalers. You can see them on the right. Hyperscaler simply means a loud cloud, probably loud too, a large cloud computing provider. You see Amazon at the top there. These numbers are taken from 2022, but it's likely that they're still roughly in the same range. So Amazon leading with 34% market share, then Microsoft Azure at 21%, Google's Cloud at 11%, and each of those have different levels of profitability. Now, we can assume that Azure is becoming increasingly dominant within Microsoft. They say this. And this is for 2023. Azure and other cloud services revenue grew 29%, driven by growth in our consumption-based services. So that's your traditional cloud offering. Now, what's interesting to note here, the entire intelligent cloud segment grew 17%, all right? Server products and cloud services grew 19%, and enterprise services grew 14%. Something inside of cloud services is dragging down Azure's 29% growth. Be curious to know what that is. Couldn't figure it out. It's not server products, which had revenue decrease by 1%. And in server products, here you can see they have SQL Server, Windows Server, Visual Studio, Nuance, GitHub. So the question here is, of those server products we just described, what percentage of the big $80 billion chunk that comes from server products and cloud services revenue, what percent of that is cloud and what percent of that is server products? I don't know, take a guess. Maybe 20% of that is server products, 80% cloud. Whatever that ratio is, cloud keeps getting bigger while server products sort of maintains itself. And as I said, there's something in there dragging that segment down. When we move on to personal computing, revenue of $55 billion, so 26% of the total. Here we can see Windows revenue. 10% of the company's revenue still comes from Windows franchise. Wow. So OEM licensing, Windows Commercial, Windows IoT. Then we have devices revenues at 10% of that number. Surface HoloLens, I'm not sure how successful that's been for them. That's an expensive sort of AR, VR lens sort of deal, hardware, PC accessories. Then gaming revenue, of course, Xbox, a popular franchise amongst gamers, and they have Xbox content and services. Then search and news ad revenue, so that's quite stale there, 24% of this segment. Bing Chat, Microsoft News, Microsoft Edge. Be interesting to see how that segment grows with their OpenAI work. We're not going to talk a lot about that today. We'll touch on it a little bit later. Now, what I found interesting, we recently did an article on our website about CrowdStrike. It's quite good. And we looked at this table here that says CrowdStrike has an endpoint protection at around 18% market share, number one position. Look who's right behind them at around 16.5%, Microsoft. So we found that rather interesting, but it's tough for a $60 billion company to compete with a $2.7 trillion company. But what's interesting here is that if you do the math on that endpoint stuff, then That puts their endpoint solutions called Microsoft Defender for Endpoint at around $3 billion. But look at this article here from cybersecurity. It says Microsoft surpasses $20 billion in security revenue as enterprise customers consolidate. That's a trend that we discussed in our article where the average company has upwards of 40 cybersecurity solutions. The more they have, the weaker they are. Right? And that's intuitive why that is. And CrowdStrike and their module approach is appealing to that. Well, so is Microsoft. You see here they say Windows commercial revenue, remember that segment, includes volume licensing of Windows and Windows cloud services such as Microsoft Defender for Endpoint. So that's buried inside that subsegment. What you'd have to do here is figure out this 20 billion number, how it's aggregated from multiple segments. That's very difficult to do actually. But what's very notable here is how well cybersecurity is working for Microsoft. So this is the first time I've seen this number from McKinsey. They claim the total cybersecurity market is now worth $2 trillion. That's pretty remarkable. When you consider, CrowdStrike, their TAM is somewhere around $100 billion. In 2028, it's supposed to go to $250, I think. Microsoft's cybersecurity revenues went from $10 billion to $20 billion in just 2 years. They're going head-to-head with CrowdStrike in endpoint security. And then IDC says Microsoft has a 24% market share of the $14 billion identity and access management market, with Okta at a distant second at 9%, something for Okta investors to note. They're also competing with Splunk in SIEM, so events management sort of stuff. They claim the only vendor to have total breadth, and they're quite appealing when it comes to a vendor consolidation play. Here on the right, you can see where we've highlighted their brand names for these different solutions. It's quite interesting. So key takeaways here. Strongest growth for Microsoft's coming from their cloud offering. We're very bullish on cloud spending. You can see this chart on the right from Google, how coming up on 2 years from now, the cloud spend is going to be around $1 trillion, almost doubled in 4 years. Strong growth for Microsoft in cybersecurity, so around 10% of their total revenues and growing very fast. A meaningful percentage, we can guess somewhere around 20 to 30% of Microsoft's exposure is to growth in cloud computing. Then you can start thinking about how AI is going to complement these various segments, right? You see them start to introduce some functionality into Office, but also realize that many companies now are spinning up their own powerful LLMs. There's no monopoly on AI, and you would expect that at some point it's just going to be assumed that everyone uses AI as their own competitive advantage. The diversification on offer that we've looked at today for this company, very impressive, while maintaining nearly 70% gross margins across all their businesses. Very well run company, aside from all the DEI rubbish that's in their 10K. They need to clean that out and get rid of that fat and divisiveness that divides their employees and damages shareholders and stakeholders and their customers alike. Microsoft's a formidable threat to various companies we're holding. We noted that. And if you want to look at their acquisitions, they actually list that out on their website. Lots of rich information that you'll find in their investor relations section. You can see here their largest acquisition yet was Activision in gaming. What's interesting about Microsoft that we discovered in today's presentation is that they're a future dividend champion. So we went and downloaded from their website an Excel file containing dividends. We ignored the fact that the yearly dividend tab contained 2 rows and was all mucked up. We simply used dividend payable date on quarterly dividends and aggregated that, and that chart on the right is what we came up with. So that's a 12% compound annual growth rate for their dividend over 18 years. That actually need to check that. It could be 18 or 19 years. But the point is that we're 5 or 6 years away from champion status for this company, and that means this would be the one of the there was a lack of good quality tech names actually in when it comes to dividend aristocrats or champions, companies that have not only paid but increased the dividend for 25 years in a row. So when we start to think about what sort of Q score Microsoft might have, this is our proprietary dividend growth strategy. We utilize 7 factors, and we can start to guess what Microsoft's Q score is going to look like. Well, they're going to max out their points in size, that's for sure. 50% of their revenues come from outside the U.S., so very strong score there. Yield's going to be low, weak score there. It's less than 1%. Payout ratio is low, below 30%. That's good. 5 and 10-year growth rates are good. When we look at the benefit that they get in their Q score from consecutive years, they'll enter the strategy at 25, as every other company does, and that's what the bottom, and then they just go up from there. So they're just getting started on that component of the Q score. When we think about investing in Microsoft, it's also very important to recognize MSCI's factor approach and think about what else we're investing in. It's not just the technology sector. We're investing in large caps, some combination of value growth. We're investing in a U.S. company. It's low beta, low volatility. It's currently a momentum stock. In a recent piece on momentum investing, we looked at that, which means that it's rising abnormally fast recently, which means usually there's a reversion to the mean there. So Microsoft, on the tin and when you dig in, seems like a great company. It certainly appears that way. But just remember that there's other factors that contribute to the overall performance of this company. Now, I've put up another video here you might find interesting. It's about investing in technology dividend stocks, so give that a look. Make sure to subscribe to our channel. We're going to put out more videos on dividend investing and growth stocks. Thanks so much for taking the time to watch this today.